I want to take this case study, a company that I recently visited that had their 401k through Vanguard. And most of the participants were in the 2040 fund. They're pretty young, so you got 30 or so years left in retirement, 26 years until retirement age. So a lot of folks just put their money there. It's a quick and easy way to do things. And I want to illustrate the concepts of performance and measuring fees in this case study. So the asset allocation, which again I mentioned in previous tutorials, is the most important decision that an investor can make. The asset allocation of the 2040 fund is 92% stocks, 8% bonds. So it's consistent, right? Because if you have 26 years or so towards retirement, you can be a little bit more risky. So hence the allocation, the large allocation to stocks. You don't have to be as conservative, so you don't have that much in bonds and cash. So the 2040 fund invests mainly in stocks, which makes sense. The product fees are 0.118%, which is extremely low, and something that can be found in the prospectus or by going to Vanguard.com. And investors do not see this fee because it's taken off the price and net asset value of the mutual fund, but it does exist. Whether you see it, feel it, taste it, doesn't really matter. It's there, and you should be aware of. And in this case, it is pretty low. The performance, and again, this is through 3/31/2014, over a 1-year period, 3-year period, 5-year period, has been extremely well. Or has it, right? I mean, you don't really know through absolute numbers. As I've talked in other tutorials, the best way to measure performance is not on an absolute basis like it's shown here, but on a relative basis. So how would you do a relative performance analysis with this Vanguard 2040 fund? Well, let's look at that. Let me talk about the world stock market. In a lot of ways, the stock market is one of the most democratic forums out there. Every single day, or at least every working day that the markets are open, the investors of the world go out and vote, and they vote with their wallets. What stocks they want to trade, what stocks they want to buy, want to sell, and they determine by the end of the day, what the allocation of those dollars are, and it's really the representation of the wishes, the aggregate wishes of the investors around the globe. And so, I want to use the first quarter 2014 return by market segment to illustrate that point. The world stock market, if you were to invest in something like Vanguard Total World Stock Index ETF, symbol VT shown here, you would have earned 1%. That's you can buy that product and get passive exposure to the world stock market. The iShares also offers one called ACWI, or the symbol ACWI, that it should provide a similar return. But essentially, you are investing through one product in virtually every single stock that's traded in the world. There's obviously some that you don't have exposure to, but by and large, it's getting you exposure to everything. So what does that look like? What does the world stock market look like? Well, if you look at the components, it's usually about 49% the U.S. So 49% of the money goes to the U.S. Developed markets, 42%, and about 9% is made up of emerging markets. And in the labels there, I showed what the performance looks like. So you can see that the U.S. did really well in the first quarter. Emerging markets did terrible, and developed markets were almost even. But the main point here is, how would you judge the 2040 fund, right? Well, the 2040 fund, you have 70% U.S. stocks and 30% internationals. The world stock market, as I showed in the earlier slide, has about 50-50. So really what the folks at Vanguard are doing with the 2040 fund is they are taking a plus 20% bet on the US and a minus 20% bet on international stocks relative to the world. So what they're saying is that US stocks will outperform international stocks. And that is an active bet, right? If you you wanted to invest passively, again, you would invest 50-50 US international, but you're not. In the 2040 fund, the folks managing that fund are making this implicit bet. So did the bet pay off? Well, I mean, if you look at US stocks and international stocks over a 1-year period, over a 3-year period, and over a 5-year period, US stocks have done much better than the international stocks. So the 2040 fund, in its implicit bet against international and in favor of US, did extremely well. And so that 2040 fund, at least the stock portion of the 2040 fund, outperformed. And if you want to answer the question, did my 2040 fund do well? The answer is yes. Not because it returned 17%, as I showed earlier, but because it beat its benchmark, which on the stock portion is the world stock market.